I'm Denise Bulat, the president of the board of directors, and I'm going to start to my right and ask each board member to self-introduce themselves. Oh, sorry. I forgot about
Plus, it's not very loud.
Well, it's not supposed to,
Okay.
it's for the system for people online, but not to project it.
Gotcha.
I'm Brett Overholzer from Shawnee, Kansas. I'm your newest board member.
Clark Lear from Nebraska. I guess I'll just stop at that.
Yeah, you should stop at that.
I'm Mark Meinert. I'm from Sylvania, Ohio.
I'm Matt Hansen, Lincoln, Nebraska.
Hi, Sally Langston. I'm from Louisville, Colorado.
Hi, Steve Hughes from Bella Vista, Arkansas.
Thank you, and I just wanted to recognize and thank Dennis McClatchy. He's not here today because he didn't run in the most recent election. He provided, I think, several terms of service to the board, and he was also our secretary, and he's very well missed by Clark, who now is our, because he is now our secretary.
If you're online, Denny, we miss you.
Okay, my first time doing this, so hang with me. The tabulation of owners' weeks of those present here today and those in attendance by Zoom lack the necessary 20% of owners' weeks to establish a quorum. So therefore, no official business can be conducted today. The minutes will be taken and posted on the Ramshorn Village Resort website, and the minutes from last year's meeting, May 24th of 2025, are in the packet or on the website currently. So,
Thank you, Clark. So the next agenda item is the president's report. This past year, we lost our founder, Alex Gibson, and the board members really, truly appreciate how management, staff, and Deb Gibson have proceeded to maintain and manage the Ramshorn and move forward in his honor, but also for all of us, since this is our home away from home. The Ramshorn Village Resort won its 34th consecutive Gold Crown Award for 2025, and I think we all know that's because of our hardworking staff. The board works with the Ramshorn staff throughout the year to respond to any changing conditions. So we have 2 in-person meetings, we have usually about 2 electronic meetings, and then at least 2 emails a month about something related to Ramshorn and respond to those questions. We continue to budget for capital needs throughout the property, and this includes our typical cyclical refreshes, updates to interiors and exteriors of our property, tree trimming, and those normal allowances for furnishings and kitchen items. But this year, we had some big items. We had more roof repairs than are typical, and we had a larger amount of asphalt resurfacing. And I don't know if you noticed, but at the entrance and in front of the office, it looks really good, really smooth, very, very nice, totally redone. And so that was a big project. And something that's very unusual, I think it's the first time we've had to do a full replacement, is our dumbwaiter, which is going to come out to about $60,000 or $70,000. So that's a big item, and that's another thing that we had to deal with. And then lastly, we had to do a total replacement of a hot tub. That's also very unusual. Normally we might have to fix a motor, we might have to get a new cover, but to actually replace a whole hot tub is also a very expensive item. And so we had to deal with that in our budget, and that is why we instituted a 2% fee for credit cards this year on all of us. My husband and I use credit card because we have a Mileage Plus card, and we like to earn miles, and we like to fly places, but we're incurring that 2% fee. But you can avoid that 2% fee if you want by using ACH, and Aaron worked really hard to implement a program called Stripe, where you can have things automatically transferred from your accounts, your debit accounts, to Ramshorn for your payments. And obviously you could write a check too. So those are your options. And one thing I want to mention in relation to our dues and making our reservations that Tina asked me to say is that remember that we just went through a leap year. And when you go through a leap year, the typical day you think, the date you think you're supposed to make your 2-year reservation on might be a little bit off. So double check that to make sure you are calling in or here present in person or online, whatever method you choose, on that date that you really need to use. So the board considers many budget options, and we were, with all the things I just said, able to keep a 5% increase in dues rather than the 8% the year before, because the year before we had higher property taxes and higher insurance. And I will note on insurance, we did get a little cost break. We were at $233,000 the year before, and we were down about to $213,000 this current calendar year. But that's only $20,000 obviously, and some of the things, the dumbwaiter and everything I just mentioned, clearly it didn't offset enough to not have to think about that bank card fee. We have 2 board positions up this year, and in the summer, the voting committee and staff will notify all the owners of your opportunity for self-nominations, and that will happen about in July, August timeframe. The board will meet to discuss the budget this year on November 2nd and 3rd in 2026 of this year here in person. That's one of our in-person meetings, and you are certainly welcome to attend. And then next year, our 2027 annual meeting will be held on May 29th, and that is again Memorial Day weekend. And then the board will meet the 2 prior days as we did, we just met the last 2 days to discuss issues, budget needs, all of that. And you're welcome to attend those board meetings. We encourage you to contact any of us. We do sometimes receive contacts, and or obviously resort management if you have any questions or comments that you would want us to be aware of. And thank you. We appreciate your attendance both here in person and online. The next agenda item is our treasurer and finance report, and that's from Mark Meinard. I always pronounce his name the wrong way. Our treasurer.
Good morning. As Denise commented, we met this last week, and as we do every year, this time of year, we have the auditors come in and they present our financial audit. And so I'll kind of go over some of the results of our audit. One of the things they have to do, the auditors, it's called required communications. It's a report to the board of directors. And they come in, they talk about the status of the audit. They said they will be issuing an unmodified opinion, which is what we want. It's a clean audit, no comments, so everything's just, the way it should be. That the audits are performed in accordance with generally accepted auditing standards. The objective being a reasonable, not an absolute assurance about the financial statements being free of material misstatement. Management cooperation, they received full cooperation from management. There were no disagreements with management on accounting or financial reporting matters. The required communications, they have to report certain things based on the auditing standards. And errors and fraud, there's no errors or fraud reported, and there was no non-compliance with laws and regulations reported, and there were no significant accounting policy changes. In fact, we had no changes in accounting policy. And then I'll go to the audit report. So their opinion is that we've audited the company balance sheet and statements of income for December 31st, 2025 and 2024. And in their opinion, the financial statements referred to above present fairly in all material respects financial position of the association as of December 2025 and 2024. And they based their opinion based on auditing standards required in the United States. And that management is responsible for the preparation of parent. So thank you again for your attention to detail, that we get a clean audit. That's what we all want. Next, I'll kind of go over, summarize the results of operations. We had this year, we had $2,671,000 in revenues. We had, which is down $74,746 from last year. but there's an accounting adjustment that we do each year where we have to value the basis of our association-owned weeks. This year we had a decrease of $139,000. So when you back that out, we really had an increase of $101,000. So we had our revenue actually went up 3.74%. That's just an accounting adjustment. It has nothing to do with cash flow or anything. It's just an accounting adjustment we have to do at the end of each year. Our operating expenses were up $128,000, which is about 4.8%. So that's pretty close to what inflation was. Our wages were up 4.7%. Fixed charges went up 4.3%. So we ended up with an excess of revenue over expenses of $97,000 from operations. And then we had expenditures from the replacement fund. That's, the improvement of the property. That was $251,000 in the income statement. In addition to that, we had $19,000 in capital expenses, which doesn't flow through the income statement, but it's still cash outflow. So we actually spent about $271,000 on improvements in 2025. So we ended up with a net loss of $139,000, but when I add back in the non-cash adjustment, it was $139,143. So we were actually positive $89. And the board's objective is we budget zero. So on a $2.8 million expense in revenue, that's pretty darn good. But, and that all goes back to management here, watching the expenses, adjusting when we have to, and the board, we look at financial statements each month. We won't look at trends. If we see something, they're very good about moving stuff around, and sometimes we have to put off expenditures. But when you look at, we take out the non-cash, we're right where we wanted to be.
Is that a happy accountant face?
That's it. Then let me go over to the balance sheet real quick. Oh, then there's a statement of cash flows. That converts our financial statement to actual cash flow, because there's a lot of things in the income statement that doesn't impact actual cash flow. And cash is the name of the game. You have to have cash to operate. So we actually ended up at $16,000 higher than what we did at the end of 2024. So we had a positive increase in cash after everything else that went on. Our assets, total assets were $3,390,523. They were down $76,339. But again, that adjustment to the cost basis, because last year we had a positive adjustment. This year was negative. So when you add those together, it was actually a decrease of $176,000 on the assets. That's why that went down. But when I take that adjustment out, our assets actually went up $99,000, just say $100,000. So our assets actually increased without that adjustment by $100,000. Our total liabilities were $2.5 million. They went up $62,000. The increase of that $100,000 of that was the prepaid owner's assessment, which is a 5% increase, which reflects the 5% dues increase. Because that liability is based, we amortize that prepaid dues each month. Then total fund balances were $862,000. That's our net worth. Last year was $101,000, so it was a decrease of $139. But once again, that cost adjustment to the owner's weeks is what's causing that. So when you take that, it ties right back to the $89. So we really increased by $89. So that's, anybody have any questions on the financial statements?
Yeah.
And you want to tell them why we had that adjustment on that?
Oh, yeah. The way that adjustment works, we have to take the owner's weeks, and what we do, we use a 3-year average of what our sales have been. It's kind of like the MLS, because we have nothing else to use other than its sales comparisons. So we take that 3-year average of sales, and that's what we're using as our value. So each year we look at number of sales and the sales price, and it's broken down by red weeks, white weeks, and blue weeks. So then we have to take that, and whatever that adjustment is, we have to multiply that times the weeks that the association owns, and that's how we come up with that value. So that kind of goes to show if anybody is trying to sell any weeks, try to sell them through Ramshorn, because we're competing with the downtown people, just trying to get rid of them where they're getting nothing. So that kind of impacts us. I mean, because the sales we had are higher than what they're selling for downtown. So that impacts, you know, the value here too. So just kind of a side note on that. That's part of the thing, but we've got.
Do you also want to share what the accountant said about the reason we don't include the value of the property here? The land and the buildings?
Well, because that's,
I'm just saying, just,
Repeat the question because of
Yeah.
the people online.
Deb was asking why we don't include the value of the land, because we only value the ownership part, not common ownership. And it's kind of hard to value.
we don't have control about some, yeah,
Yeah, we don't have control.
yeah.
So, okay, other than that, then I'll go over the treasurer's report, which is, I believe, included in the packet. This is just a summary of the cash and investments we have as of, yes.
I would just add, it is typical for a timeshare resort not to include
Right.
the value of the land and the common areas, so I just want folks to know that. So the way we report it in our financials is comparable.
Right, it's just on the real estate.
But that's what we all own jointly, and that's the
Yes.
biggest
Correct.
asset.
Right.
Yeah.
Absolutely.
Yeah.
So as of April 30th, our total fund balances is $1,500,000. That is about $82,000 in operating funds, and funds held for future use is $1,098,000. That includes rental deposits and the future prepaid dues. And then we have the reserve funds that we have set aside for replacement. That's $319,000. And compared to last year, last April, we're up 2.19%. Any questions? Okay, that's my report.
Thank you, Mark. Now Deb will give her management report.
Hi, everybody, here and online. We welcome and thank you for attending the Ramshorn Village Owners Association Annual Meeting for 2026. As I always do, I would like to formally ask our department heads to come up and take a bow. This is in part because we want to thank them for all the things that they do for us, but the other thing is they all have to go back to work. So, Aaron, Tiffany, Dan, Tina, we have to actually walk This is what holds our community together. So thank you all for all that you do. We've got what, 28 years? 22, 22, 20, yeah, 23. It's in my report, so if you read it, take a bow.
You want a yoga person?
Thank you, guys. As usual, I use a lot of words, and they're all in my report, so I won't read them to you. But I also wanted to say that there's a personal letter. So, there's a personal letter in there, please read it. Okay guys, we are celebrating 36 years of operation and 23 years of homeowner-controlled nonprofit management. And nonprofit is what Mark was talking about in his report. We do not budget for a profit. We're all in this together. Everything that comes into the property stays with the property, and that's unlike when you have a management company or a developer. Typically there's 20 to 30% that's kind of taken off the top. So you either see that in the form of higher fees, which ours are about 30% lower than what you typically see at a timeshare operation, or you see it in reduced expenditure on the property. Everything that we all contribute, and I'm an owner too, goes directly into the property, making it better. We are, as part of the reason we're celebrating, thank you. I'm not gonna do it again. It's all in my preamble. Our success continues to be guided by the 2003 mission statement, and it's focused on delivering exceptional vacation experiences, maintaining high quality standards, and preserving long-term value for our owners. This requires a long-term commitment by all of us. Every single owner that's here and online and not online or whatever, our board, our management and staff. Our resort maintains strong online reviews. They've been consistent, they've never been higher. We remain in our market, a well-maintained and competitive resort. The Owner Connect system that we expanded a couple years ago includes now online payments, advanced booking for certain weeks. These enhancements provide owners with increased flexibility and convenience while operating within association policies. For example, now owners can reserve some lower demand weeks and make payments online. A lot of these things that you see that we do is based upon input from owners, and where you're experiencing difficulties and asking for different additional, we hear you. We can't always do everything all at once, but we do hear you, and we try to implement things to make it easier. You can now attend scheduled meetings, for example, in person or by Zoom, and even watch the meeting later at your convenience. One of the things that was instituted when we all of us as a group approved new documents for the association is nothing can ever happen in a meeting. Even if we had everybody here and online, the way that it works now is any matter of importance has to be referred to all owners so everyone can electronically vote. So nothing can happen unless we all agree it's going to happen. So rental activity plays a key role in the association's financial stability. Renters will be paying up to over $5,000 a week, including taxes, to be here this coming summer. Some rental rates, nightly rental rates exceeded $650 a night last year. We'll see how we do this year. The higher this helps us, the higher we increase the revenues on rental, it increases revenue to owners and the association, and it helps us offset some of those operations expenses. And we spend somewhere between $140,000 to about $155,000 marketing rental weeks for owners. So the association, as I said, benefits from highly experienced and loyal staff. Our leadership team averages over 2 decades of service. The lower the turnover, the less the expense in hiring and retaining and replacing people and retraining new staff. And several of our team members are cross-trained in more than one work area, which gives us flexibility, because we're a small, lean staff. We have about 24 year-round staff members. We received our, as Denise said, we received our 34th consecutive RCI Gold Crown. I think there's only about 30 of us in the entire world. We're in the top 1% of resorts worldwide. We've also earned TripAdvisor's Traveler's Choice Award for 12 consecutive years. And all of our other ratings on Booking.com, Facebook, Yelp, and anywhere you look are extremely high. 90% of our ownership remains within our original families, demonstrating a strong long-term value. We continue to prioritize maintaining an attractive and welcoming environment for current and future generations, because we do need to know that we need to adapt to the times. Since 2006, over $4.8 million has been invested in reserve improvements, an additional $425,000 from our home stretch program, which allows us to do a little extra things that aren't in our budget. The total investment has exceeded $5.25 million. So that supports the resort's high quality standards and market competitiveness. The property consistently, or is currently estimated to have a value between $26 and $28 million. That's what we all own jointly. For those who don't know, the original property was purchased and developed for about $6 million. So we've got a beautiful place sitting here at the entrance to Rocky Mountain National Park. Ramshorn Realty continues to provide resale services on site as it has since Alex first created the project in 1990. Only 1 week of ownership has sold in the last year by any other broker. So almost all sales have been done on site. 95% of the sales that have ever been done at Ramshorn have been done through Ramshorn Realty. So it's important. We have 3 or 4 listings downtown that have been sitting there for quite a while that are priced lower, and that affects our market rate when people see those listed. So Ramshorn Village remains financially strong. We're well maintained and highly regarded. The continued investment, strong leadership, and dedicated staff position the resort for ongoing success and long-term value for our owners. And with extreme gratitude, I'd like to say a special thanks. I'd like you to join me. We have an incredible board, and it's been a pleasure to work with them and our owners and staff in building a strong future for the association. But thank you guys for everything you do. They spent a lot of time on their... This is the spouse's corner, so... The spouse's corner also spends a lot of time supporting the association. Yeah.
I want to make a comment about the home stretch. The $425,000 that Deb referred to, that came from Deb and Alex.
Yeah.
So special thanks
Yeah.
to them.
Yes.
Yeah, and what that derives from is we've always taken a portion of our 4% of a particular sale that we do in-house goes towards those little extras that are not quite in the budget. So when we come up a little short, we want to do something a little bit better, like leather furniture or things of that sort, then that's where Homestretch comes in. But thank you. Thank you all. Thank you.
Thank you, Deb. We appreciate your leadership for this organization. All right, you have written reports on investments and on the voting from the voting committee in your packets. The status of the weeks that we own are that we own 100, as a whole association altogether, we own 104 red weeks, 144 white weeks, and 130 blue weeks, for a total of 378 weeks as of right now in our snapshot of time. Last year we owned 367 weeks. So we stay in about that range. It goes up and down in that range, depending on what we sell, and then depending on what we end up getting back. So we wanted to make you aware of that. And so now it's time for owner questions, and depending on if it's appropriate for staff to answer the question, or if someone on the board will open it up to questions.
There's a question.
Yes, yes.
Online. It was when you were speaking, Deb, they want to know how they get access to your report.
So
It's online.
So the report that Deb just made is in the annual meeting packet that should have been emailed to everyone who signed up for the meeting, but it's also on our website, I believe.
Yeah.
It's on our website. So the owner meeting, annual meeting packet for today is on our website and was emailed.
So if you go, I sent out a third notice of the meeting last night, and right after the board meetings concluded yesterday, we compiled the annual meeting. We approved the annual meeting packet, and if you look at the announcement that was sent last night, you'll see right near the beginning, annual meeting materials. That's where it is. Just click on that link.
Are there any other questions? Are there any questions in the room? Wow, that's unusual. Usually we have quite a few questions, but that's unusual. Well, I'm glad we answered your question. Well, thank you, everyone. I know there's some refreshments that we'll have available for you. We appreciate your time coming here in person, and those of you who took your time this morning online. And lastly, remember that this is Memorial Day weekend, and we need to remember those who have fought for us throughout time here in the United States, and those who have lost their lives, and then our first responders. That's what this weekend's about. Thank you.